Well, hello out there. Market Monday is about to fire up again this week. It is Blair Nightingale, your host, July 18th, coming in Market Monday, flipping the script. Last week, looking at what is happening in this market, dropping, how low can it go? And flipping that, as I mentioned, when do I know that this thing's going to be going back up, right? We looked last week at it moving down. If you didn't see that, I would highly recommend go back and watch last week's episode because we are going to do the opposite today. And it'd be really good to know both. We're going to look at, as I mentioned, when do I know this thing's going to be going up? But I will say at the front of today's episode what I'm going to say at the end. I don't think we've found the bottom yet, right? I think there are a lot of reasons why we can and likely will, continue to see continual movement down over the next, 3, 6, 9, 12 months, unless we start to see some of the things that I am going to show you today. Unless we start to see some of the things that I am going to show you today, then I am not confident that the market's going to be going back up. However, when you begin to see these things that I'm going to show you, you can feel confident. Hey, the tide is shifting. I can feel more confident about getting into bullish positions, into looking at taking some of that money that I've saved, not leaving it in all the way down in a bear market, and put that money to work, right? When trading is consistently moving in a trend, it is easier to do. Really hot, high-flying bull markets, hey, that's not a bad thing, right? We've talked in Market Monday over the last little while about how, recessions, downtrends, stock market crashes can actually be incredible opportunities. But there are also opportunities for you and I to be cautious, preserve capital, right? We don't have to be doing a ton of stuff in those times. Even though there are some opportunities, a big opportunity comes to us when we do see stocks bottoming out, right? When we start to see the beginning of some real economic recovery. So laying the groundwork here to say that I don't think we're really into those bottoms yet. Now, as I mentioned, as we've looked at the indexes, we have seen the impact of this economic data, right? Interest rates, inflation, a lot of bad news, a lot of negativity, sending the markets down. But I also think we have moved into fear, but we haven't really capitulated to a real panic where we've seen a real overflow of negativity into a real crash, right? There's still a bit of battle back and forth at the levels that we're at right now to hold the indexes around 20%, right? A little bit more, a little bit less, depending on the index we look at. But the S&P 500 is pretty darn close to that level and has been holding that. So seeing, could we move a lot further down? And again, that is what we looked at extensively last week in our episode to see, hey, where could this thing be going down to help me mitigate risk, to help me prepare for the future. If you are joining us tonight, I love it when you guys drop comments, hello, questions into the comment box, which is actually right over here on my screen. And you can send those over to me, Facebook friends, YouTube. You can join in the conversation. And I love to hear from you guys because it's so much better in this back and forth environment, which is what this gives us the ability to do. When I know your thoughts, comments, questions, concerns, whatever they might be, you throw them in that chat and I can go ahead and interact. If you have any questions about the stock market, about what we're talking about as we're going through, I would love to hear from you on those as well. So with that said, we will also pop in the chart as we're going along here. I might as well just go ahead, go here. We'll pop up the S&P. This is so amazing. Before we even get into anything else, let's look at this. First of all, look at this pattern, right? Nice, clean pattern. This morning, we see it open up in what? Resistance. We had a positive day. It actually gapped up at the open, right? It opened at a higher price than it closed at on Friday. We got a gap right into resistance. And then we dropped right at resistance, closing below the 10 and 20-day moving averages, right? So the thought that maybe we were going to pull back into those moving averages and just catch a quick bounce off of that and move up into the 50-day, at least by the end of today, was pretty much shot, right? But what's really amazing is some of you guys are more experienced with this technical analysis than others. But actually, let me do this. Here was the old downtrend we had, right? It hit resistance and fell. Finally, it broke out. It started a new downtrend. Today, it hit resistance and fell, right? We don't know if it's going to go all the way back down to support again, but it's amazing how often this works. Technical analysis works. It's real. It's very, very, very cool. And it helps us. It helps us make decisions. So we will come back to the chart here in a little bit. But of course, we want to answer the question. I'm going to give you 3 things tonight. 3 things. How will I know when the market is going to recover? How will I know? Well, the first one might not be the most obvious answer, right? One you maybe wouldn't think, but it's the most important thing to say initially. Okay, initially, this is very important. How do I know when the market's going to recover? Well, the first thing is you will not know the exact bottom, right? The exact turn. Very likely, you and I will not know the exact turn, the exact bottom of the market. And it's helpful for us to know that there are going to be some real objective, solid things we can watch for to see that the market's going to turn into a positive market tone for us, right? But that doesn't mean we need to try and guess the bottom. It doesn't mean we need to crystal ball. We can just let that go, because the 2 other things I'm going to show you that help us know that the market is turning, those things are not dependent on guessing the bottom. And it lets us just let go of thinking that every bounce that the S&P makes could potentially be the bottom, and we need to be in right away doing trades or even reinvesting long term, because we can let the market come to us, right? We can let the market prove to us what it's doing and then go from there. So we're not trying to guess. We're not trying to crystal ball the bottom, as we like to say, right? Trading isn't about knowing the future. Trading is about managing risk. So that's what we really need to focus on here. So if any of us are going, you know what, I really want to nail this bottom. Of course, that's always fun. It's always nice to get that. But really, we don't have a solid way to know exactly when that is going to happen. I think right now, as I mentioned regarding last week's episode, we still have a lot of question marks out there. So too much excitement about us being in a bottom right now, I think, is premature. I do think we're seeing some tech stocks. I think we're seeing some things in the NASDAQ start to form some bases, and they're bottoming out a little bit. They're starting to form an attempt at rallies, and we'll look at a little bit of that in a minute. But overall, the market's still looking pretty weak. And like I said, still a lot of questions there. So what we are trying to do, right, that's what we're not trying to do. We're not trying to guess the exact bottom. We don't have to. We don't have to, right? That FOMO, that fear of missing out, it's probably going to get us into trouble. As traders, FOMO gets us into trouble. Instead of using our skill sets, instead of using patience, we try to jump on things prematurely, and that takes on risks that we don't need to take on, okay? Every now and then, that could mean that we get ourselves in a good spot, but when we're trying to guess bottoms in a negative environment, it can really spell trouble for us. So we don't want to do that. Now, that's what we're not doing. What we are doing is we're looking for changing and, of course, bettering, right? Improving financial conditions. Remember, the stock market is a leading indicator, right? Wall Street, they're looking at all the data, all the sentiment, all the news, and they buy stocks when they feel confident about those things. They sell stocks when they feel negative about those things. So when we really start to see some underlying conditions change, then that is a precursor, like I said, a leading indicator to show that our economy could really be taking a turn, right? In a good way, because it's been taking a turn in a bad way, and we have not shaken that out, right? That's not out of the system yet, right? Our last inflation reading was the highest one we've had now of the year, right? Of the last year and a half, even. In fact, the highest we've had since 1980. Okay, so pretty significant. We were hovering around 8.5%, but we broke 9%, really because of energy costs. Energy costs really, really driving inflation up. So we won't know the bottom. So the first thing we want to do is just let that go, right? We want to let that go in the conversation because it's not what we're trying to do here, okay? Now, that said, the next two things, I think this is important because on the opposite side of this conversation is a narrative that says you really can't know the bottom at all, right? There's really just no point in trying to guess. There's really no point in trying to do that. Well, I will agree with that regarding my first point. But I won't agree with that in general, right? Especially as an argument to say we should just leave everything in the market all the way down. The reason being is because there are a few things that are pretty objective, that when those things, historically speaking, right, not just an opinion, but historically speaking, when those things start to show up, markets are improving, right? Markets are improving. These are precursors to big, hot bull runs in the stock market, all right? So this second point then, right? So the first one, we're not going to be able to time the bottom exactly, and that's not what we're trying to do. The second one is I want you to watch the index patterns, okay? Let's go back to what we were looking at. I want you to watch the index patterns. So here's the first one, guys, and it's so simple in a way. I suppose maybe it sounds like it's not that profound, but technical analysis is profound, okay? Here you had a nice strong uptrend. Higher highs and higher lows, right? We can move this back a little bit even. Look at that. Higher highs and higher lows. Boom, boom, boom. Well, we're in a downtrend. So as long as we're in a downtrend, right, we're not at a bottom. Now, again, I know that doesn't sound profound, but it is. It actually is. Because if I'm still within this trend, I don't want to do that, right? I don't want to put money in when that is happening, right? I don't want to go back into a mode of stock trading like I was in the bull market until I see an actual trend in the indexes, not just on one or two or even more than a few individual stocks. I want to see it across the indexes, specifically here, of course, in the S&P 500. Now, we had this pattern here where it was downtrending, it goes sideways, and it breaks out. Okay, so we had a breakout. That was early on. We hadn't actually hit bear market conditions. So we might have thought, well, okay, I don't think the bull market is over yet. It goes, it makes a high, and then comes down and does what? Fails to make a higher high. It breaks out of the downtrend, but it fails to establish a new uptrend. So yeah, we broke the downtrend here, but it doesn't get back to what it was doing here. And then, of course, we've had months now of downtrend. So what I would want to see is the S&P 500 breaking out of its downtrend or whatever bearish pattern it's making at the time. This is just where we're at right now. If it breaks out, right, pulls back, then breaks out and makes a new high, right? Not just a breakout, but it breaks out, makes a higher low, and then breaks up and makes a higher high and continues to trend. Remember that if we shift into a fully blown bull market and you don't catch the first move or several moves, that's not a big deal, right? That's not the biggest deal. We're waiting for a bull market to look at how many moves there were in this market. Now, this is really clean, consistent trading here from last year, okay? We are not there. But those are the kinds of things we want to see. I'm not saying we have to wait 6 months, but we have to wait to see the pattern change. And we can, in some ways, complicate it more than that, where really I want to see a breakout, right? Some of us want to jump in and try to trade at every bull bounce, right? And while there are opportunities for people with skill sets to take trades when the market bounces at support, you are trading counter trend, right? You're in a downtrend. So you're trading against the trend here. And that's not ideal. And it's certainly not a trigger for anything particularly long term or a large position, right? Because it's much more speculative, it's much more risk. You are trading counter trend. So we're looking for that breakout, but we're waiting for that breakout to pull out, pull back, make a higher low, which we started to make here, pulls out, pulls back, makes the higher low, and then fails and ends up making a lower high. That's what we would need to see over here, right? The index needs to show confidence. And you and I can sit back and say, okay, show me confidence. When you guys show me confidence, I will start to shift, right? It's okay for us as retail traders to sit back and go, I want to wait for them to do that. Now, can I not try and catch the breakout and do things? We can do that. And then there's some other skill sets we can add where we're taking risk in a smarter way if we're trying to do that. But I can tell you that just trying to guess the bottom repeatedly, if the market continues to be negative and drop, it's just going to wear away at your capital, right? So waiting for this thing to actually break out is important. If I go over and I show you guys a ticker here to give you an idea on an individual stock of something, okay, that's beginning to look like it wants to break out. So look at this now. Okay, we're not quite there yet, but it's been moving down pretty consistently off that 10 and 20. But over time, let's go back to here, really still dropping off the 50-day. So we're not above that 50-day yet, but it makes a low, right? Pops up, makes its high, starts to fail like it has been, right? But doesn't hold, right? It turns around and makes a higher high. Now, if here it pulls back like it did today and then breaks through, especially if it gets above that 50-day, right? Then we're seeing a stock that is actually starting to trade counter trend. Now, I'm not highlighting this stock for this stock's sake necessarily. I'm saying, look what some of these downtrends look like in a reversal. I don't need to try and fade the pattern, meaning I'm going counter trend. I can wait until it breaks. And that's what we're going to look for on the S&P 500. That's what we're going to look for on the NASDAQ. I highlighted this one for our students this morning. The NASDAQ's gapped up. It's made a nice move. Look at this. It's making higher lows, right? Higher lows, but we're still in the wedge. It's right in resistance. I didn't draw that line after today. That was drawn because of these two highs. And that's what it hit, and that's what fell. So we're not trying to get a breakout until it gives us a breakout, right? So again, that one might seem simpler, but we got to recognize the obvious here, okay? I can sit back and I can let the pattern come to me, and seeing a breakout is important because it is that leading indicator. So we don't have to guess the exact bottom, but when's the market going to recover? Now, it may seem like, okay, Blair, you just told me that one of the signs that the market is going to recover is that the market recovers, right? We could interpret what I'm saying that way. And again, I'm not saying we have to wait for 4 months of solid, consistent uptrend if that could have been a great opportunity. I'm simply saying that while we are still in a downtrend, why bet on the bullish side when the trend is not bullish? We can wait for Wall Street to give us some breakouts, put in some higher lows, and then we can start to look for some opportunities. We can start to say, okay, clearly, just based on the chart, confidence to some degree is coming back into the market. Now, I'm not saying if we break out of this trend tomorrow even, that means boom, raging bull market is on, right? No, I want to see it pull out, pull back, follow through, and then I can start to cautiously re-engage on a bullish side. I don't have to go in and trade with full position sizes on every single trade, right? Traders do not have to do that. We can get back into the water, as it were, one step at a time. And as it continues to prove that it becomes consistent on the bullish side, obviously confidence is going to continue to grow for us, for Wall Street. And that's only going to create more buying momentum, thus pushing trends like that up even further. So patience is really point number 2, but we're being patient for something specific, not something vague, something technical that we can actually watch for, that, your neighbor who maybe doesn't have any skills is just going to try and watch the news and decide now I think is a good time. Some people are going to get that right, but a lot of people are going to get that wrong. You can protect yourself by waiting to see that pattern change. That's number 2, right? We don't have to guess the bottom. Whew, good. Take that weight off of our shoulders. We can wait for a trend reversal. Good. All right. That's pretty clear. And then the third thing is that we want the tone of the data to change. So we can get really lost in the news. I showed you last week some examples. Well, this guy thinks it's going to go this far, but then this guy thinks it's going to go this far. So it's interesting to look at some of their examples and the projections of where people think that the market could go and why. But that said, it's not very objective, is it? It doesn't really give us some concrete answers. Part of that reason is because they don't know the future. They may have fundamental reasons why they think that risk is on the table, and that's good for us to know, which is why we went over it, but it doesn't tell us the future, right? What is really objective is that there are really 2 pieces of data right now that are essential for any major turnaround in our economy to really happen. It's not only these 2 things, but it's definitely these 2 things, okay? The first thing is inflation numbers have got to come down. And they've got to come down significantly. I would expect a pretty significant bounce in the indexes if we get an inflation report that beats estimates. Now, estimates were missed, okay, at the last one. As I mentioned, it was above 9%. So it grew even more than they expected. They thought it was bad, expected it to get worse, and it got worse than that, okay? If we see the opposite happen, I'm expecting a pretty solid intraday, right? Day of bounce on the indexes. But we need to see inflation come down multiple times. We need to see a trend that's saying inflation is getting under control. Goldman Sachs reported earnings today. It was actually a positive news item in the open of the day to see one of these major banks coming out and beating on earnings. However, their CEO said, sort of gloom and doom style, that inflation was, quote, deeply entrenched in the global economy, close quote. So that's not so great and gives us a projection, not to say that it can't be brought under control, but that it's going to take some time in order to do that. So we need to see that come down. So without knowing all the economics, without going and reading 100 different articles and newsletters and all that kind of stuff, you and I could just say, all right, is inflation getting better or is it getting worse? Or is it staying the same? Which, by the way, if it stays the same for a while, that's almost like it is getting worse, because they need to see it changing. Because the second number that you and I are going to be able to follow is the Fed lowering interest rates? Last week, we talked about them raising them, and they are raising them. In fact, home builder sentiment, right? It's a measurement that they do in our economy. Home builder sentiment, with the exception of April 2020, right? You remember what happened April 2020, right? How can we forget? Which is really skewed data almost, because it's not like there was a fundamental factor in one sense that caused anything to change in April. We just had to actually shut everything down. So of course there were a lot of record-breaking numbers in April 2020. So that was the number one, but the number 2 biggest drop in home builder sentiment, right? Their optimism and outlook for home building, it dropped the most it's ever dropped. We got that number today. That's not to say doom and gloom. I don't want us to read more into that than it is, but it is definitely deeply affecting the economy. And part of that reason is interest rates are going up, right? Home prices are already at all-time highs and interest rates are going up significantly. Of course, that's affecting real estate, certainly is affecting stocks. And if inflation continues to rise, interest rates will continue to rise. They're looking at what we would call a 3/4 basis point, which just means 0.75% in the federal funds rate, the interest rate, right? It's actually being talked about that they may do a full percentage point. The Bank of Canada, I believe it was last week, actually surprised everyone and did a full percentage point in order to get inflation under control. They're looking at being more aggressive. So for you and I, and we talked about this last week, looking at interest rates and them being aggressive on them is actually, it's dampening the positive sentiment and the desire for Wall Street to go out and invest a lot of money in stocks. Well, as long as that's true, you and I can't have a whole lot of confidence that stocks are really going to take off, even if you and I think they're cheap. There are cheap stocks out there compared to where they were at the beginning of 2022. But the amateur is going to go out and just say, hey, you know what? This is cheap. I'm just going to buy it. And that's it. All right. And perhaps, and I do believe that there are some good, solid companies out there that are on a pretty decent discount at this point. Okay. I just think with the conditions that I'm describing, there's further to fall. And I'm willing to be patient on those. All right. So as interest rates are looking at rising, even maybe a full basis point, right? That full percentage point, it's going to continue to weigh down on the markets. So we don't have to have an economics degree. We don't have to sift through a bunch of news, but I am looking at inflation and I am looking at interest rates. And if I begin to see a trend of interest rates moving down and I get to a point, and this could be a year or more from now, where the Fed is actually looking at lowering the interest rate, right? If they start to lower that interest rate, that is going to boost excitement on Wall Street. It always has. I don't know if I can say it always will. It seems like it probably always will, because as that interest rate goes down, money gets cheaper to borrow. It starts to flow in our economy, and that floods the system, creating growth. And that's what Wall Street wants. You and I just want to jump on the back of that. That's what we want to do. So when we're looking for recovery, we want to go, number one, I don't need to pick the bottom. Okay, that's not my biggest concern. But I can watch for number two, is the S&P breaking out of a downtrend or not? Okay, that's second thing. And then how's inflation? And are the Fed lowering rates? Are they cutting rates? If we go into a really full-blown recession here and the economy deeply cools down, which, by the way, is what they're trying to do with raising interest rates. They're trying to cool the economy, which tells us that stocks are going to continue to drop because the stock market reflects our economy. So if the Fed is trying to cool the economy to tame inflation, right, and we end up going into a full-blown nasty, I'll say, recession, eventually, they're going to use that interest rate tool in the opposite direction. They're going to start cutting interest rates to stimulate the economy, right? This is part of what they do to control it. Now, it's a bit controversial at how well they do at doing that and how much manipulation should there really be in the economy. Perhaps we could say that a lot of the manipulation that has been used over the last, I would say, 2 years, but even longer than that, is a large reason why we're even experiencing the amount of inflation that we have. Things are way overheated, right? So that is an issue maybe we tackle for another day when it comes to the Fed as a whole. But they use that tool in a significant way to heat and cool the economy. So when we start to see interest rates rise, we're looking at, probably going to cool down. When we see interest rates fall, right? Things are going to start heating up here. When all of those things start to come into play, right? And I'm not talking about 10 variables that need to be perfect. I'm talking about the S&P breaking into an uptrend, inflation coming down, right? We need to see some reports of that, and the Fed bringing interest rates down instead of up, because right now they are nearly 100% probability of moving 0.75 basis points in their next meeting, maybe a whole point altogether. So we're not looking at going down yet. With that on the table, I'm hesitant. I'm going, I don't think so. I don't think it's time yet, right? Some of these things need to wash out. The market is consistent, or I should say persistent, in wanting the market to bounce. They want stocks to go up, but the strength so far just isn't there. And now you know 3 things that you can do to see, hey, is this thing turning? We don't have to guess the exact spot, but we are going to recognize the season. And the season is in those 3 conditions that I just gave you. And I would tell you that those conditions are not present today. So we're going to continue to meet right here on Monday nights, doing market updates as we always have. You can stay connected to us here at Treyway by liking on Facebook, subscribing, ringing that bell for notifications on your YouTube account, because we're doing all kinds of great content all week long and we can get this out to you, right? We're not going to bombard you. We're going to show you every day what we're doing on here to help you understand what you can be doing with your money and thrive. If you like what you are seeing, go ahead. You can always email us at support@treyway.com. If you have something that you would like to request for an episode, you can always email us, support@treyway.com. I'd love to hear from you guys. Appreciate you as always being on here. Don't forget these 3 things. I'm telling you. People reach out to me, Blair, the stock market's discounted. Should I be getting in right now? This is what I would say. This is what I would say to anybody. This is basic, but so pivotal. Remember, small hinges open big doors. These may seem like small things, but they're actually a really big deal. So pay attention to that, and you will be all the wiser for it. Again, I appreciate you guys being on here so much. Let me know if there's anything I can do for you, and we will see you right here at this time on this channel next week for Market Monday. Appreciate you, and have yourselves a good